we live in the world that reacts a little bit more calmly to shit hitting the fence because we just got used to all of the crazy stuff that is happening left and right.
Is it super cypherpunk aligned? Arguably no, but it is definitely one of the largest rollouts of actually being able to use crypto in our day-to-day life.
The big trend of this year is going to continue to be M&A. I think we are going to continue to see the great consolidation of the crypto industry.
Gun to my head, if I had to make a guess, will Bitcoin outperform gold and will Bitcoin outperform the S&P and the Nasdaq? I would bet on yes. GM, and welcome back today to our first episode in 2026, where we are joined by Juri again. How are you doing, Juri, and how have you lived through the change of the years and into the new year?
Man, it's so good to be back. I survived New Year's Eve because I spent New Year's Eve in Berlin. So luckily, I survived Germany's biggest war zone at the moment. Now, jokes aside, it was very smooth start into the year, very positive. Did some cooking, so had the time to. I had like enough time to spend some quality time with my friends and family. A very calm start into 2026, and now very excited to get things started again. As we have seen, there are a lot of things we definitely have to catch up to. I mean, the year started like parabolic, right? It was like January 2nd and the world was a different place. Usually you see like a slow start into the year, but I don't think that this is going to happen under this current US administration. We live in a South Park episode, but yeah, let's get it started.
Yeah, I've already been in Puerto Rico when the whole Venezuela invasion started, and some of my friends even heard the jets taking off overnight when they started the whole thing. I personally didn't because I have a very, very heavy sleep, but it's somewhat nice to see that volatility is finally unraveling in the world, which has been suppressed over the past 30 years. I mean, obviously the events themselves are rather unpleasant and not a big value add to society, given that we have much more relevant problems to take care of on our own. But do you think that geopolitics will still affect markets the same way as it did in 2024 and 2025? Given any geopolitical conflicts, maybe another escalation of a trade war. Yesterday, we've just seen new tariffs imposed on various European countries, given the push of the US to purchase or however else acquire Greenland. Do you think that will affect markets and, I mean, specifically crypto to the same extent, or is that slowly reducing?
Yes and no. I mean, on the one hand, for sure it will impact the discussion. I mean, if Trump continues to, threaten the EU with certain trade wars, of course they're going to be responsive from the market. I think everything else is completely naive. We're living in a very, very fragile world right now, it seems like there are so many construction sites and fights and conflicts left and right, and basically to say, yeah, whatever, we live in our wonderful pink crypto world and we are in our unicorn bubble and there won't be any consequences because of that, I think would be very, very naive. However, I remember the time of 2022, and when Russia invaded the Ukraine, a certain period of time, markets went down very rapidly, but then they bounced back, but then they again went down again pretty much, and we started to really strongly feel the consequences of the invasion by Russia and into the Ukraine. But I also think that we kind of got used to this volatility and to all of the different conflicts. So yes, of course, there will be consequences, and whenever we see like a breaking news, I think we see like short-term volatility to the downside. I don't know, Trump sending troops to Greenland. I think, of course, if this is going to happen, of course, we are going to see some movement in the market. But on the other hand, I think unless nothing like super big is happening, I think the volatility gets more and more adapted to the times we're currently living in. I don't think like that the market will be overly surprised if shit hits the fans. Sorry, I hope that I can say shit on this live stream. But if shit hits the fans, I think okay. Just for the algo. But yeah, I think we live in a world that reacts a little bit more calmly to shit hitting the fans because we just got used to all of the crazy stuff that is happening left and right. What do you think?
Yeah, I agree with pretty much everything you've said there. I think you hinted at an important distinction between stuff that we've gotten used to, specifically the US now being more explicit towards their geopolitical enemies and the enemies of the so-called Western world at large. If there's another strike happening against Iran, especially in the wake of the protests going on there, or let's say if something happens with Syria again, or like in the entire Middle East, or maybe another military operation in Venezuela, I do not think that markets would overly fear any consequences because it doesn't materially change the world order, the order of geopolitics that we are in right now. It might accelerate certain trends of change that we are witnessing right now, but it is not a 0-to-1 event. It does not like introduce a completely new primitive. If, however, something happens towards countries that until now are perceived as allies, or at least maybe not to the intensity as before, given what we've also seen last year at the Munich Security Conference and the whole, let's say, critique of NATO and the lack of EU spending and the entire trade war. If that is now targeting former allies or still allies to some extent of the United States, I definitely think that this could unsettle markets because that would be a new conflict introduced that is happening and playing out between nations in the Western world. And the markets, the companies that majorly influence the markets, specifically stock markets in the US as well as Europe, are still mostly interdependent on fruitful relations between the United States and Europe and their respective consumer bases and companies when it comes to B2B focused firms. And if that gets disrupted, we could really see a lot of tumultuous behavior, to put it that way.
I mean, two things. One, I think we should also shift it like more towards the crypto side because of course if we see like these major movements, of course Sherlock, no shit Sherlock, there are going to be consequences also for the traditional markets. But what we have seen in 2025 is, despite the headwind that markets experienced, if you look, for example, at the German DAX, the DAX went up, the S&P 500, like everything went up, but crypto went down. So I think especially if stock market goes really down because everyone thinks, okay, we're in a situation where World War III is going to accelerate. Obviously, I think this will have like also consequences at the stock market, like severe ones, but then also crypto is getting strongly impacted. At least this is what it looks like. But let's shift maybe the discussion to, okay, but what does it mean for crypto? Do you think that this trend will just continue, that people basically say, okay, well, there are like two sides of this story, so to say. Of course, hey, I'm not too worried to hold, I don't know, Apple stocks or Google stocks or the S&P 500 in these times because let Trump or the EU or Putin do whatever they want. Let them do whatever they want, because at the end of the day, people will still buy the new iPhone. But you know what? Crypto is a different thing. In these times, people will still buy the iPhone, but nobody cares about Solana. Nobody is using these technologies that much because people don't see it as a necessity. And then the second thing, what do you think do you also think that all of this is just noise to cover up Epstein files? I think that's the true thing, because year started Epstein files, and then Venezuela, Greenland, Iran.
Well, maybe to start with the second question, I am actually only, I think it's 30 or 40 miles off of Epstein Island. Basically, if you look this way, there are the US Virgin Islands, and Little St. James is pretty close to that. I unfortunately do not have a boat to like go there and see what's going on there. Maybe we find the answer to all of these questions buried there in some lonely sheet of paper still flying around on the island. But to stay a little more serious, but I'm not sure. I think if we look at 2025 and what we've witnessed throughout 2025, like a very clear acceleration of an unraveling world order where the US hegemony not only gets questioned by rising powers, but also by the United States itself, because there is a growing awareness that it is pretty much unmanageable to take care of domestic issues within the US when it comes to affordability, when it comes to education, when it comes to immigration, all of the things that are sparking controversy in the domestic political scene there, and as well dominating the world order, playing world police, etc. And the, I would call it, pretentiousness of the West of the past 30 years, where we have hailed ourselves as the unequivocally morally good actor in the world, that is also coming to an end. In our introductory episode of the entire Odyssey podcast, Owner and I talked about some trends defining this decade. And one of my highest conviction picks was definitely that the era of globalization and the global kumbaya that has lasted from 1990 until 2020, and which really was a unique phenomenon if you look at the entirety of world history, even if you just include the Western world in that, that has come to an end with 2020. And we now have to reshuffle the cards to adapt the economy, geopolitical relations, strategic alliances to accommodate to a changing world order that is happening through technology, that is happening through media, that is happening through demographics, and that is also happening through the shift of financial power and financial infrastructure. And if you look at all of these trends, the logical conclusion would have been crypto should have massively outperformed in 2025. Maybe not so much infrastructure altcoins, but especially Bitcoin and ETH and Solana, because these give you ownership, these give you agency in the infrastructure where you can build a less trust-based financial infrastructure for the time ahead. And this didn't happen. Altcoins obviously severely underperformed Bitcoin, but also Bitcoin underperformed rare earths and metals, the stock indices, and pretty much everything that you would have guessed would be outperformed by Bitcoin in a risk-on environment, which for most assets we have still seen in 2025. So the question remains, will that trend continue in 2026? Might sound a little bit naive, but I would say that, yeah, again, this time is different, and the trend will not continue. I mean, to be frank, if we were to say the trends will just continue into infinity, why even stay in this industry at all? If we just acknowledge, okay, Bitcoin is now in our view suddenly also a failed experiment, even though nothing has materially changed between now and a few years ago, where we had said the complete opposite. And let's just pivot to gold, and let's just pivot to silver, and maybe put a little bit into the stock indices, even though they're all sitting at all-time highs or close by that. I think that would be a very bad timing for that pivot. I still don't see why Bitcoin would continue to underperform in the mid to long run, especially given that Bitcoin performance is much less tied to consumer sentiment now, given that it's much more of an institutional asset. I also think that it will revive the narrative of being a geopolitical asset. It is, besides gold, the only asset you can hold without being at risk of like seizures or like some other nation state confiscating your asset. We have seen that in 2022 with the breakout of the Russia-Ukraine conflict, or at least the like renewed heat in this conflict and escalation, where for the first time, I think since World War II, the assets of a significant nation, which Russia still is in a geopolitical context, have been seized by another one. I personally had a few people in my friend circle whose family's assets got seized in that entire operation, and who moved some of their liquid holdings that they were still able to access in the unfolding of that process into crypto. And I do think this will continue. We might see a little more of a gold focus by the BRICS nations and by the global South and by the global East, whereas the global West, I think, will logically conclude to focus more on Bitcoin. I would still say that the current United States administration is, at least in principle, aligned with Bitcoin. The alignment with the broader crypto industry is a different discussion. Also, if you look at the new uncertainty introduced in the crypto market structure bill that we've seen over the past couple of days. But gun to my head, if I had to make a guess, will Bitcoin outperform gold, and will Bitcoin outperform the S&P and the Nasdaq? I would bet on yes. This is not a bet I would take at 90-10 odds or something crazy like that, but it's more 55-45. It is more a 60-40 bet. I can look up the poly markets while you're giving your opinion, but gun to my head, I do think there's going to be outperformance.
Yeah. I mean, I could imagine it under certain circumstances, of course. So right now, I would say, I would actually say that it's 50-50, because again, it strongly depends on what's happening outside of the financial markets. If we continue like that, so if things further accelerate with regards to geopolitical pressure, I'm pretty much convinced that there won't be any major moves that any digital asset is making, maybe except one or two exceptions. But yeah, I think if we basically repeat the sentiment of 2025, where we get used to this volatility and where there's a lot of noise but not much movement, if that makes sense, then I would echo it and would say, okay, there's a 60 to 70% chance that Bitcoin and the big dogs, Sol, ETH, and so on and so forth, will outperform the S&P, gold, etc. Then I think yes, there's a high likelihood, and I think it pretty much matches my sentiment as well. 52% chance.
Owner and we briefly covered that market, I think last week or 2 weeks ago. I wouldn't bet on this favoring Bitcoin because I dislike gold, but I just think that Bitcoin is still easier to move. I still think that if you just look at the liquidity, not even the physical ability to move it, I still believe in the Bitcoin to gold catch-up trade over the next 10 to 15 years to be to be one of the most compelling ratios that is out there in the overall macro landscape. So might not materialize this year. I think these odds are fairly priced. I would probably put them more towards 55 to 60%. Obviously, given that Bitcoin is much more volatile than gold, these perceived odds can drastically change. I mean, we just saw, if you look at the market at the right-hand tail of the graph, given that we just saw a downturn of Bitcoin yesterday that was pretty sharp, odds already dropped from around 56 or 55 to 52%. So I wouldn't interpret too much into this market in the short run. Obviously, if we see a huge Bitcoin bear candle down to the 70s or 60s, while gold is just continuously ripping upwards, that of course signals that these odds should drop, and that is a fair repricing of the market. But other than that, I think it's somewhat fairly priced. Maybe I'll reprice it a little bit to the upside. There's another one where it is first to 5K gold or ETH, and that is now heavily in favor of gold with 86%. And I would align with the sentiment of this market quite a bit. I find it easier going into 26 to have a decent or high conviction on Bitcoin rather than on Ethereum and Solana.
There are too many question marks. There are just too many what ifs.
Also, in terms of the valuation metrics, if we continue the trend of 2025, where we shift more towards using TradFi established valuation metrics for crypto, there is simply no way to sustain the current valuations of Ethereum and Solana. There's no way to justify that just looking at cash flows. So there needs to be a very explicit return of TradFi institutions and TradFi allocators to pricing Ethereum and Solana as a network and giving them some like non-cash flow dependent network premium. And I think in order for that to happen, we need to see a drastic acceleration of Ethereum and Solana serving as issuance and execution chains for stable coins that do not only get issued by crypto native firms and projects, but also by large banks, maybe by individual states and nation states or equivalent institutions. We also need to see a very stark uptrend to continue when it comes to tokenized equities. Interestingly enough, we just saw an announcement a few hours ago that the New York Stock Exchange is now working on a trading system that will enable 24/7 trading of equities. So again, what we've seen in 2025 is that all the ideas, all the visions, all the wishes that we've had in crypto ever since 2021 are starting to become true. But the very difficult to answer question remains is, will our industry also be the one that captures the value created by the realization of these trends? Or will it just be TradFi firms or fintech firms that use our technology, but that doesn't accrue any value back to given tokens or DeFi projects or infra projects?
Yeah. Yeah, 100% resonant that. I think this leads us just generally to the broader market, because there are too many question marks around all these layer ones. And then if we go down the layer 2 discussion and the layer 2 rabbit hole, even more, too many what ifs. I think what's certain though, and I would obviously it's very hard or impossible to make a poly market bet on this, but I think institutional adoption indeed will go up. And then I think that's also a very good introduction to the stablecoin topic that we want to cover today. Is I think, yes, this adoption curve will further accelerate. And the question right now is for the big dogs. And I think this is what we will see generally. I think we also talked about this already in previous episodes, is about this consolidation phase. And I think right now we will see for sure we're going to see this, because M&A activities just reaching all-time high after all-time high, not only in crypto, but also in the broader economy and in broader financial markets. But I think what we will see is that we will see a consolidation phase of the entire infrastructure stack. And the question is that all of these open source networks, they need to see if they can compete with institutions building their own networks, because there might be a future, and we have to accept this. There might be a future where we have Bitcoin, maybe Sol and ETH, and the rest is just institutional stack. And some nerds and some cypherpunks use some DeFi, open source DeFi apps on Ethereum and maybe Solana or something. Might be a future for this, and the rest is just basically banking but in blockchain language. So I think this is the critical questions that these projects have to face, and I think this is a great introduction to what we see now. I think it's a boost what we're seeing right now with the upcoming launches of stablecoins, more stablecoin adoptions, and more applications that launch from a professional and not professional but corporate level. I think this will further boost the volume curve of adoption, so to say. But the question is what remains for the broader industry. I think everything else just consolidates to one big piece or big chunk.
I'm not so sure whether the existing stuff will consolidate. I think a lot of it will just die off because there's no clear product market fit.
Yeah, that's what I mean.
And yeah.
Die off X, consolidate. What just one sec to make it clear. Consolidate whatever can still somewhat live and is somehow relevant will consolidate, and the rest obviously just dies.
Very, very much agree with that outlook. One notable news announcement from yesterday is that WalletConnect, which essentially is a infra provider that in the DeFi context lets you connect with like a bunch of different wallet providers. They're now integrating with Ingenico, which was one of the widely deployed payment terminals in the world. So if you're at a gas station, supermarket, hairdresser, whatever, department store, chances are they have an Ingenico payment terminal. And they are planning to roll it out in Q1 and Q2 of this year. First in Europe, which I think is a welcoming announcement. So finally, us Europoers are not the last one to benefit from some technological progress. Essentially, from the way I've understood it, it presents you a QR code. You scan the QR code, and then from your crypto wallet of choice, you can just send the money over there. It prints out a receipt. It is a traceable transaction. You can use it for like it essentially. It is not a like weird, shady P2P peer-to-peer thing anymore, as it is in many instances nowadays. So, is it super cypherpunk aligned? Arguably no, but it is definitely one of the largest rollouts of actually being able to use crypto in our day-to-day lives. And that is something that we have all wished for ever since the inception of this industry. So I do think that this is a quite monumental step. Again, does that include any value accrual to DeFi tokens or to any stablecoin tokens? No, arguably not. When we are talking about the stablecoin growth in a second, I also think that it is important to differentiate between the outlook for more DeFi native versus institutionally geared stablecoins. But yeah, I think the WalletConnect Pay, not really a sign of consolidation for me. It is something new that we haven't been able to offer in a comparable size in the industry. It's just a shift in where value accrual gets accrued and how it gets weighed compared to what we've seen before. It doesn't necessarily take away from any DeFi protocol or from like any crypto infra provider on the technical infra side, but it's just, I mean, WalletConnect has been there for 4 years, 5 years, like it's been around for forever, integrated by tons of DeFi applications. It's just like not everything that is successful in crypto needs to be like well known or perceived as something super exciting by the average retail participant. I mean, how many people are excited about the stocks of like fintech or TradFi payment providers? Everybody knows Visa, everybody knows MasterCard, everybody knows American Express, but are people deep in the trenches of Stripe or Square or Western Union? A few are, but not to the extent that it would be comparable to what we've seen in crypto in the past. So overall, I do think that this is still a very positive development for our industry. I don't really care if the value accrues to some obscure infra crypto token. If like an integration like that gets closed, if there are not even any shareholder rights established, if there's no securitization framework, so like the benefit would still be pretty much up in the skies and an unanswered question.
Yeah. I mean, on the other hand, you have to say that the adoption or like the adoption of Stripe is on a whole different level. Like every online service, like every online shop works with Stripe at the end of the day. So this is like a lot of room to catch up on for the industry still, just to make that case clear. But yeah, I agree on that this is a massive step, a very important step into the right direction. But yeah, the question is like how many users WalletConnect can attract on their own, like people, like from what end, from in what way whatsoever, like either it's via B2B or via it's B2C. Yeah, we will see if that plays out, but they also need to like bring a customer base to these platforms, right? Because maybe there's a WalletConnect logo and I see it, but if nobody really is using it and stick to MasterCard, Stripe, and whatever, then yeah, it's a nice to have, but there also needs to be like true usage of the application, right? And this is like and I think that's like generally a meta that I'm really dying for to see in crypto, is this true fee generation, like not the Fugazi wash trading fee generation, but this true fee generation of people actually generating network fees because they want to do something productive with your application. And I think, yeah, stablecoins obviously is the most obvious bet on that.
Yeah, I really think that this is one of these types of announcements where there is no reason to doubt the value proposition or the actual utility stemming from it compared to what we've seen over the past 2 years being built and being announced, particularly looking at meme coins, Launchpads, etc. I think from a business point of view, there is a strong incentive to push solutions like WalletConnect, because the value proposition of that integration is basically that if you're paying with a credit card today, Visa, MasterCard, American Express, there's usually a 2 to 3% fee that these payment providers are taking. I could imagine that for large retailers, they are able to negotiate lower fees. It probably hurts low margin small businesses like a cafe, like a family owned restaurant, much more than it hurts a Walmart. But obviously, looking at the absolute amount of money a Walmart could save with probably far above 100 billion in revenue and purchases by consumers every single year, like that, if that's 2 to 3%, if you make 100 billion in revenue, that's 2 to 3 billion you could save. Obviously, you will not save 100%, but let's say WalletConnect takes 0.5% in fees instead, or 0.1% in fees instead. Like you would only have to pay, instead of 2 billion or 3 billion on 100 billion in revenue, only 500 million, or maybe even just 100 million that is getting lost. So I think the business case for WalletConnect from their perspective is very clear. They can still make money from fees taken on these transactions, and the value proposition to large retailers as well as to small restaurants or family-owned shops is also very clear. I think the crux to figure out here is, how do I get the customer to use WalletConnect? We obviously have, especially in the Western world, quite a few people who are familiar with like transacting with crypto cards or crypto wallets. Eastern world as well. Obviously, the usage of chains and different stable coins is a little different over there. It's much more Tether focused than USDC focused. Is obviously much heavier on Tron and Binance Smart Chain instead of Ethereum and its L2s in the Western world. But I think the value proposition is clear. Still, as long as there is no smooth integration of crypto wallets into existing neobanks, into existing payment providers, without them introducing some other fee on top that would again deter either the consumer or the business of like integrating with that, I still think we have quite a far way to go. We are definitely getting closer, but the entire issue of like, if your private key gets compromised, you lose all of your money and there's no way to recover it. Like, yes, the idea of self-custody is great, and it is at the heart of the crypto ethos, and it should never disappear. But if that is the modus operandi and there's no way to introduce some standardized security frameworks, recovery frameworks, etc., on how to store your assets safely and in an easier manner, you're not going to onboard Generation X. You're not going to onboard the boomer generation. You'll onboard some millennials. You'll onboard a much larger portion of Gen Z and Gen Alpha to come. But the people who conduct a lot of expenses, the people who have a lot of control over the wealth in the Western world, it is still not super appealing to them. That is not to advocate for a pivot of crypto to just like optimize catering to these generations. But we have to keep in mind that just for the internet, it took a decade or maybe 2 decades, and probably until the mid-teens, maybe even until COVID, until some small mom and pop shop started to have their own website with their opening hours displayed. So yes, monumental development, but it's not going to change the world within 2026. I highly doubt that.
Yeah, I get that. I mean, 100% agree on what you said with the comparison to the internet. Although, I mean, I hear this comparison to the internet all the time, but let's make something clear. The internet is not one-to-one comparable to blockchain. Like, internet is basically everything. Internet is, we order Ubers, we do cloud, we do like online shopping, we Google things on the internet, we play around with ChatGPT. There's like a huge like a big tool set of things people do with on the internet, also including financial products and blockchain right now, at least. And I mean, yeah, breaking news, blockchain is for finance, but it's just finance, if that makes sense. There's like one part that we, like one gap that we are filling. It's not like the internet where we see basically a revolution of all kinds of things. That was the internet. I think blockchain, to admit that, is smaller than that. Or like the
I agree.
the consequence in society.
Yeah, because I think the main reason for that is that blockchain doesn't necessarily change the fact of who owns the end consumer. It is not a front end technology, it is a back end technology. And that has been very clear since 2021 when people talked about how to use blockchain as a tech solution. Yet, even until now, the fact that it is a back-end solution, it is probably mostly B2B focused and doesn't even have that many touch points with the end consumer. It has not been reflected in prices. It had not been reflected in the hype around various projects and their tokens in crypto until now. I think we're getting closer to that. Obviously, there's still tons of projects out there where it's a long way to go to almost zero until they have a fair valuation. Not to name any names here. We've conducted too much of that bashing already in past episodes, but most people can imagine what we were talking about. But maybe to briefly pivot to the stablecoin topic. So stablecoins have seen tremendous growth in 2025. I think they grew from almost 200 billion to 300 billion in circulation within 1 year, which is a 50% increase, and like an increase in absolute numbers of 100 billion, which is not nothing. Most of that has obviously been driven by Circle and Tether, but the largest amount of new stablecoins were still very crypto native. So it is a bunch of crypto backed things where you can use your other crypto assets to mint stablecoins against that. There's a lot of tokenized delta neutral trades, which is Ethena and these alike. Then you have a bunch of, let's say, crypto or DeFi native hedge funds, or at least some with unrestricted choice of strategies, some with a very low risk profile, and they tokenize their base asset into a stable coin. And we have seen, I think it was 88 new stable coins being launched in 2025. I personally do not think that we will see as many, at least not as many that people will recognize and that will take off in 2026. I also think that while DeFi native stablecoins is not a winner takes all and also not a winner takes most market, it is a market that is applicable maybe for 10 to 20 true stablecoins. What we will see continuous growth in is some stablecoin-esque tokenized financing vehicles, where I think if you look at the RWA-backed section down here, I think the likes of the Gaip and like all of these AI compute things where you essentially tokenize a share in these data centers or like computing centers through a stablecoin, and the usage of stablecoins to conduct financing for various capital intensive operations, both in the emerging markets as well in the developed economy. I think that will continue. If you look at large-scale energy projects, if you look at large-scale infrastructure projects, which we need much more of in the AI dominated and AI driven economy, I think this will continue. I think stablecoins are a very suitable instrument for that because it also gives access to retail. But yeah, I think the like rehypothecated for the third time DeFi stablecoin, yes, it will not disappear in 2026, but I kind of struggle to see sustained growth in there just because the very DeFi native capital acts and behaves very differently to the institutional capital that is moving into crypto. And I think that if we see the magic number of 500 billion or maybe even a trillion in stablecoins breached within this year, it will not be driven by DeFi native applications. It will be driven by nation states issuing bonds on stablecoins. It will be driven by some major banks tokenizing their money market portfolios.
Yeah, I agree on that. Yeah, actually nothing to add here.
Yeah, I think that if you're sobering down about the industry, that is kind of it's a very logical conclusion, even though we might not like it. And I do think that the fun days of the food farms and like all these DeFi Ponzi's are slowly getting to an end. Will not disappear completely, but will just take a backseat in the stage of the industry. Maybe one last topic to briefly discuss before concluding the episode is Search. So Search is essentially another launchpad in quotation marks, but it is focusing on AI related launches, and it is very exclusive in who it gives access to, who is able to launch via that platform. So it's like verified AI builders. Apparently the team behind it has very good connections into the Web2 AI builder industry. And yeah, I do think that it's kind of a long-winded thesis, but I do think that launching your own vibe coded project, launching your own AI thing will kind of replace launching a meme coin in 2025 or trying to 1000x your net worth trading altcoins in 2024. Don't get me wrong, these are very different activities at the core, but I do think they will attract a somewhat similar group of people who previously tried to make a quick buck with these other activities.
Yeah, could be a matter for this year. Could be totally plausible, especially because we have seen how quickly, for example, also prediction markets took off. And in the year before, we saw the meme coin phenomenon. And yeah, could be that this is another thing. Even though, yeah, I would put this more towards meme coin department and not compare too much with prediction markets. I think prediction markets was something that's like way more serious, even though there are also like a lot of things to consider. There are like certain things that are very, very hard to predict how prediction markets could be relevant in future, aka, hey, I bet that one person throws like a hot dog on like during an NBA game on the field, and I open this bet on Polymarket, and then I throw a hot dog on the field on my own. There's like this a certain thing that prediction markets might struggle with, but besides that, I think that prediction markets have been taken very, very seriously, also by broader media and the broader financial market. But I don't see that this is going to happen here the same way. I think could be a trend, yes, for 2025, but to be honest, not a big believer of that. And also vibe coding, yeah, could be a solid run. Wouldn't be surprised.
Yeah. I agree directionally. I think I'm a little more optimistic on this entire thing than you are. I would agree that most of the vibe coded applications will turn out being useless or like not being able to
Fugazi.
sustain any value capture 6 months or 12 months going forward. And the fit of using the primitive of internet capital markets, so crypto native financing for these vibe coded things that potentially also include agentic commerce, however, I do think is a very good fit. So I think there's some traction in this narrative if it takes off. But yeah, I don't think it is like going to hyper revolutionize finance and the world going forward. Maybe to conclude, is there any other major trend in 2026 that you are seeing that we have not touched upon, which you maybe want to give a hint on for the next episode?
Very good question. Very, very good question. Is there another trend for 25? I mean, like we discussed it, I think, like this is like nothing financially that people might be interested in, but I think that the big trend of this year is going to continue to be M&A. I think we are going to continue to see the great consolidation of the crypto industry. This, what I foresee for the upcoming year.
Very nice. I think one topic we have not touched upon much in this episode, which I think will gain a lot of traction in 2026, but it's also not on the consumer side. It has some consumer touch points, but it's not like super consumer native, is bringing commodities on chain and being able to trade these. I think in geopolitically less stable world, there is a strong incentive to bring that asset class onto the blockchains and into DeFi. Ostium, I think, is an interesting project that is leading the charge there, but I do think that there will be others to follow. Also, what is happening in the Hyperliquid ecosystem with HIP-free, they have integrated a bunch of TradFi assets when it comes to indices, when it comes to individual stocks. I'm not exactly sure if they already offer commodities, but yeah, the entire bringing TradFi assets on chain with decent liquidity, with like a good securitization, that is going to be a leading thing for this year.
Amazing. Yeah, let's see what the year holds.
Yep. I don't think it's going to get boring, but was great catching up, and see you next week.
See you next week.